Hi again everybody, this is Simone Guy with the SimpleFib method. In this video we will continue to look at how to use the 50% breach fib, and I'll be looking at an example here, a couple of examples in this video of how we do that. Okay, so let's pick this high here at, this is 6:45 p.m. and this is good because persons who trade the Asian session will see how this setup can also, work pretty well in the Asian session. All right, so at 6:45 p.m. we have a high, and our first hint is a candle. This is the sell candle pattern here that develops. Okay, we have a hangman, then an evening star. Okay, so let's mark that high. What we're looking for from this high is the previous low to that high. And notice again how the fractals help us to easily pick that. So we have three lows here that are pretty close. So let's use the lowest of the three as the previous low. And we're going to pull for our 50% fib. And we're going to fib from that high to our low. All right. So our 50% level is at 1.4997. So what we're waiting for is a close below this level and an opportunity to enter. All right. So we have a close below on the 7:30 p.m. candle. This is on the 9th of March. If you want to follow through this trade on your charts afterwards, the 9th of March. So we have a close below our first 50% breach at 7:30 p.m. and then we have entry on this candle here at 8 p.m. So let's mark that as our first entry point. Okay? Once you get an entry on a 50% breach, the next step is to find, well, in this case we are trading from an uptrend downwards, so we need to find the previous low from the low that we last used. Okay, so the previous low from this low would be here on the 11:30 a.m. candle. Notice now that we are stepping back into the past. We first fibbed from the 1 p.m. candle. Now we're fibbing to the 11:45 a.m. candle. So we adjust our 50% fib to the previous low. Once we have done that, we would have been able to identify the next 50% level. And this is important once you begin to make entries, because the 50% levels on these swings are going to be identifying areas of support on the way down. Support means that the market can buy off this level, or it can break the level to create resistance to facilitate further selling. Okay, so the 7:45 p.m. candle breaks and closes below the 50% level, and notice there's quite a bit of price action here that's telling us that this level here is holding. So we have our second entry here, and let's mark that. I'd like to point out that at this point you would have wanted to move your first position, your first entry, to a place of break even. Okay, so that by the time you've taken your second entry, your stop would be at this break even. So you're still risking, say, 30, 40 pips on the trade. Okay, all right, so we have our entry here. The next step is to find the previous low from this low at 11:30 a.m. So we're stepping again into the past. We're now at the low of 8:45 a.m. on the 9th of March. So we need to adjust our 50% fib down to that level. Once again, our 50% level has changed, identifying the next area of support. It's broken and the market waves back, and usually when you get this strong waving back to a 50% breach for continuation, you're going to get a very strong move. Okay, so it waved back up, and watch resistance now. So this support now becomes resistance because we're below it, and it's holding, 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 and at 1:30 a.m. going into the 10th of March, we get a sell here again. This would be our third entry, and let's mark that. Now we need to continue to look for previous lows, but we are not able to see any previous lows in sight. What do? This is the point at which we need to zoom out. Zooming out, we're able to identify a previous low all the way over here on the 2nd of March. See that? So we need to mark that as the previous low from this low going downwards. This is the low of the this looks like the 10:45 a.m. candle on the 2nd of March. So we need now to adjust our 50% fib all the way down to that low. So let's zoom back in to the period that we're currently trading, and let's see what happened. We see here at 2 a.m. on the 10th of March that there was a close below the 50% level at 49.50, and then we got an entry at 2:15. So this would have given us a fourth entry on this trade. One, two, 3, 4 entries. This was a 130 pip move. You would have been able to enter here for 63 pips, here for 95 pips, here for 98 pips, and here for 110 pips. That's 1 day's trading, folks. Okay, now you'll observe that after your fourth entry, the market finally got a chance to wave back and test this 50% level again. This would have been the strongest level of resistance on the swing, since that's where major selling basically began. And so you could have anticipated another sell here. So if you wanted to, you could have taken a fifth entry right here on the 10th of March at 4:30 a.m. This was actually an 80 pip move. Okay, this is the end of this video. I hope that you have enjoyed this video, as well as that you have learned how to use and how to adjust your 50% breach fibs. Once again, this is Simone Guy with the SimpleFib method.